Tēnā koutou katoa. Welcome and thank you for making the time to view this video. My name is Mike Stone and I'm the Director of the AML Group Regulatory Services in the Department of Internal Affairs. Today in our session we will provide an introductory overview of the Anti-Money Laundering and Countering Financing of Terrorism Act, what it is and why New Zealand needs it, who we are and what we do, what this means for the real estate sector. Well, let's first touch on what is money laundering and terrorism financing. Money laundering is the process criminals use to clean the money they make from crimes. By making the money look like it comes from a legitimate source, they can cover their tracks and avoid being caught. Funds are channeled through things such as property, expensive goods, and financial services. Terrorism financing uses similar methods to money laundering to channel funds. New Zealand currently has the highest rating of being a very clean country when it comes to corruption. This means New Zealand's international reputation is positive when it comes to trust in our businesses, government and financial systems. We are seen as a reliable nation with little impediment to establishing mutually beneficial business relationships. It is in the best interests of all New Zealanders to maintain that position. What we are here today to discuss with you, the Anti-Money Laundering and Countering Financing of Terrorism Act, which we'll simply refer to from now on as AML-CFT, is key to this. The primary purpose of the Act is to detect and deter money laundering and financing of terrorism, maintain and enhance New Zealand's international reputation, and contribute to public confidence in the financial system. It, AML-CFT, is part of New Zealand's response to an international commitment to limiting a global problem of money being laundered and enjoyed by criminals, and to prevent terrorist organisations accessing funds to further their aims, both here in New Zealand and abroad. It is estimated that $1.35 billion is laundered in New Zealand each year from fraud and illegal drugs. However, the true cost and social impact is much higher. The government is committed to targeting the prevention of $5 billion in broader criminal activity and reduce about $800 million in social harm. As we progress through our session today and share our guidance for you and your business to comply with the AML-CFT legislation, please remember we are here to help you not only comply with the New Zealand law, but also to take protective measures of your business reputation and the global reputation of New Zealand as a safe place to do business. The real estate sector, along with banks, financial advisors, casinos, accountants, lawyers, trust and company service providers, provides services that can be used to facilitate the entry of illicit funds into the legitimate financial system. From January, the real estate sector is covered by the Anti-Money Laundering and Countering Financing of Terrorism Act. That means your industry sector joins the AML-CFT system. This is because real estate sector businesses have been identified as being vulnerable to abuse by criminals to disguise the illegal origin of money or funds. Let's look briefly at the total system. The Ministry of Justice is responsible for the high-level policy and administration of the Act. There are 3 supervisor agencies in New Zealand. The Reserve Bank is the supervisor for the main banks and life insurers. The Financial Markets Authority, or FMA, supervises financial advisors and licensed securities and financial product providers. The Department of Internal Affairs is the supervisor for the real estate sector. We also supervise payment remitters, casinos, lenders, lawyers and accountants. The Act refers to businesses like you as reporting entities, and part of your responsibilities, which we explain later in this session today, is to submit suspicious activity reports to the New Zealand Police Financial Intelligence Unit. The New Zealand AML system is part of a global community that includes the United Nations and the Global Financial Action Task Force. You are not the bad guys. The criminals who want to launder money through real estate agents are the bad guys. Real estate, whether commercial or residential, is particularly attractive to criminals, and your role in the AML-CFT system is an important one that can make a real difference. We recognise that some businesses get things wrong, but we are looking to establish a cooperative relationship where businesses are genuinely making an effort to get things right and work with us to do so. Our aim is to support you, to protect your business from being used by criminals. We prioritise our activity based on risk, and where a business genuinely wants to comply, we want to help it to comply. If businesses are not cooperating, we are likely to pay more attention to them from a compliance and enforcement perspective. So what do we, the Department of Internal Affairs, do? Page 12 of the guidance document provides some detail around the regulatory approach of the DIA. We focus on the regulatory system, how the whole system works together. What you will see most from us in the beginning is guidance, advice, and information. Post January the 1st, we will start doing standard compliance checks. These are called desk-based reviews and on-site inspections. We will work with other supervisors, the Ministry of Justice, and the Police Financial Intelligence Unit to ensure that we are consistent and coordinated, and that the AML CFT regime works well as a system. We also work with other jurisdictions and international bodies to share information and ensure we are complying with international standards. We use a range of tools: intelligence analysis, monitoring, and evaluations to target our resources to the areas of the highest risk and potential harm. I'll now hand over to Darren Howells, our Principal Advisor.
Hello, we're now going to get into some of the detail. Our real estate agent guidance provides the detail of what we're about to summarise. Real estate agent licence holders are captured by the Act. This means that the agency as a whole is the reporting entity with a collective obligation to comply. If you are self-employed, the reporting entity is you. If you work for a company or agency, the company you work for is the reporting entity. A licensed salesperson or branch manager has to comply with the AML CFT requirements of the real estate agency they work for. You are captured by the Act for your real estate agency work. This can include money that moves in and out of your trust account. Today we will cover 3 key steps. More information is available in the guidance and on our website. The first 3 steps are: 1. Appoint a compliance officer. 2. Conduct a risk assessment of your business. 3. Based on the risk you identified, develop and establish an AML CFT program of policies, procedures, and controls to address these risks. Let's talk about each of these in more detail. Please refer to page 17 of our guideline document. The compliance officer role is a critical role, responsible for administering and maintaining the AML CFT program, and they will liaise with us as regulatory supervisor for the real estate sector. We consider that the right person is someone who is suitably qualified and trained, and who can confidently and proactively engage with us, the Department of Internal Affairs. They need to be someone who has a good understanding of your business, and they need someone who understands the position, its serious role, and its serious obligations. This is not necessarily a full-time position. If your business is small, this could be a part-time role for an existing person. A common question we get asked is if someone from outside can be contracted to be a compliance officer. The answer is only if a business does not have any employees. The Act requires all reporting entities to have a risk assessment. This is where you assess your business to identify the money laundering and terrorism financing risks. Based on the feedback we've received, we understand that many of the real estate reporting entities will be outsourcing the development of the risk assessment. Whether the actual work is outsourced or completed in-house, you are still responsible for the risk assessment and how it is applied. It is a requirement that you understand the money laundering and financing terrorist risks that your business faces. There is some useful information in our website. These documents are the Risk Assessment Guidelines, Program Guidelines, and the AML CFT Risk Assessment and Program Prompts and Notes document. The risk assessment needs to relate to your business and the markets you operate in. The more complex your business and the services you provide, the more detailed your risk assessment will need to be. The risk assessment will be proportionate to the risks faced by your business. We should also note that developing a risk assessment is not a one and done process. It needs to be reviewed and updated regularly. This includes situations where there's a change in your business. For example, if you open a new branch or change the types of property you sell. Please refer to page 17 to 18 of the guidelines document for more information. Developing your AML CFT program. Your program is essentially your compliance manual. It must be informed by your risk assessment. Once you've defined what your money laundering and terrorism financing risks are, your program should contain policies, procedures, and controls to mitigate these risks. The Act refers to the term customer. For the real estate sector, this is your client. It may well be that you're already aware of most of the factors you need. You know your clients, you know your risks, and how to mitigate them. This document formalizes that existing knowledge, and it is a legal requirement under the AML CFT Act that you have this in writing. It needs to cover all the items we will now talk about. It must include procedures to obtain and verify a client's identity and report suspicious activity. It should be something that a new staff member could pick up, read, and understand what they need to do in their job. Your AML CFT program should also detail how often you will review your risk assessment to ensure it remains up to date and to identify and remedy any deficiencies. Your AML CFT program should include policies, procedures, and controls for how you are going to fulfill your ongoing requirements. Customer due diligence. We have received feedback from some of your peers that, as part of your business practice, many of you are already taking steps to identify your clients. Under the Act, you must verify the identity of clients before providing the service. In some circumstances, such as they represent a company or trust, you may also need to ask them for information about where money came from. This additional checking constitutes what's called enhanced due diligence. Your program should also detail how and when to submit prescribed transaction reports to the Financial Intelligence Unit. For example, if a client wants to conduct a transaction in cash that is $10,000 or more, or an international wire transfer of $1,000 or more. It should detail how to report suspicious activity to the New Zealand Police Financial Intelligence Unit, which is also known as the FIU. Suspicious activity is broader than a suspicious transaction and includes where a person seeks to conduct an activity or a transaction through your business, or where a person makes an inquiry in relation to a service. As a general rule, a suspicious activity will often be one which is inconsistent with what you know about your client or with a normal business expected for that type of client. It should include policies and procedures for account monitoring and ongoing customer due diligence. Customer due diligence is also known as CDD. Ongoing customer due diligence means observing your client's requests, activities, and behavior and remaining alert for red flags and suspicious activities. You should outline how you will vet staff and train staff on AML CFT. You must keep adequate records which will enable you to operate in your AML CFT program effectively and also enable it to be audited by an independent auditor and reviewed by us, the DIA, as your supervisor on request. Records must be kept for at least 5 years, and your program and risk assessment is required to be audited every 2 years. Finally, your program should state that you're required to submit an annual report to the Department of Internal Affairs. You will already have strong business practices which can protect your reputation. These controls add to that and mitigate the risks that you have identified from your AML CFT risk assessment. I will now pass you to Trish Mullard, Deputy Director for the AML Group, to explain some of the key requirements of the Act for your business.
One of the key tenets of the AML CFT is knowing your customer or client and verifying their identity to an appropriate level. Section 5 from page 23 of our guideline document explains in more detail your client due diligence obligations. In most circumstances, this would be the vendor of the property, unless you have been engaged by a buyer to help them find a property. Your client means just that. It is the person or entity that you enter into an agency agreement with. This is your client. You will need to conduct due diligence on all new clients before you sign an agency agreement with them. This is the point at which your business relationship commences. When your client is an individual or a couple of people, determining who you need to conduct CDD on should be straightforward. If the only person you are dealing with is the vendor, then this is the person you need to identify and verify the identity of. You do not need to conduct CDD on anybody else. Where the CDD process can be more complicated is where your client is multiple people, or a company, or a trust. In these situations, there will be a number of different people that you need to identify to comply with the AML-CFT Act. What we're about to cover is outlined from page 23 of our guidance. Firstly, you need to identify and verify your client. If the client is a company, this will include the name of the company and the company number. If it is a trust, this will include the name of the trust. Secondly, you will also need to conduct customer due diligence on any beneficial owner of the client. This applies to trusts, companies, and any other legal structures. We recognise that conducting CDD on these legal structures can be quite complicated, and as a result, we have published specific fact sheets on how to conduct CDD on both trusts and companies. These can be found on our website. A beneficial owner is defined in the Act and means an individual who has effective control of a customer on whose behalf a transaction is conducted, or owns a prescribed threshold, 25%, of the customer or person on whose behalf the transaction is conducted. For example, someone who owns more than 25% of a company that is your customer. In these situations, you will need to conduct CDD to be satisfied that you know who the beneficial owner is. For some clients, there may be several beneficial owners. And thirdly, you will also need to identify any person that is acting on behalf of your client. Some example situations would be a person exercising a power of attorney for your client, a legal guardian acting on behalf of a minor who is your client, an employee who has the authority to act on behalf of a company that is your client, a friend or family member of your client that has been asked to deal with you. For example, if the client doesn't speak English, you are required to identify any person that is acting on behalf of your client so that you are satisfied you know who they are. You will also need to be satisfied that they have the authority to act for your client. Another important point for CDD relates to persons that conduct occasional transactions with you. A person that conducts an occasional transaction with you is not your client. You have already conducted CDD on your client before you signed the agency agreement. A person conducting an occasional transaction with you will be the other party to the real estate transaction. In most circumstances, this will be the purchaser of the property that you are selling. It's important to remember you do have customer due diligence responsibilities on the purchaser of a property when they pay you $10,000 or more in cash or by cheque. However, if the purchaser transfers funds online into your trust account, you do not have to conduct customer due diligence on the purchaser. There are 3 levels of customer due diligence. Standard customer due diligence will apply to most residential and commercial property transactions in New Zealand. Real estate agents must conduct standard customer due diligence when a business relationship is established with a new client, a client seeks to conduct an occasional transaction or activity through the agency, there has been a material change in the business relationship of an existing client, and there is insufficient information held about the client. When standard customer due diligence applies, the following information must be gathered about a client: the beneficial owners and a person acting on behalf of a client. Full name, date of birth, if the person is not the client, the person's relationship to the client, address or registered office, company identifier or registration number. You must also obtain information about the nature and purpose of the proposed business relationship with the client, and sufficient information to determine whether enhanced CDD needs to be conducted on the client. You should also keep records of this information. Enhanced customer due diligence is required when there are factors creating a higher level of money laundering or financing terrorism risk, or are otherwise specified in the Act. Please refer to page 30 of our guidance. For enhanced due diligence, you need to ask about the source of funds or wealth and verify this information according to the level of risk. Enhanced CDD will need to be conducted on customers listed in Section 22 of the Act and includes trusts, non-residents from countries that have insufficient AML CFT regimes, companies with nominee shareholders, a politically exposed person. If a client seeks to conduct a complex, unusually large transaction that has no apparent or visible economic or lawful purpose, and when it is considered that the level of money laundering risk involved is such that enhanced due diligence should apply. The final type of customer due diligence is simplified and includes government departments, the New Zealand Police, registered banks, and more. For the real estate sector, standard and enhanced due diligence will be the most common, and your risk assessment will help you determine the type of customer due diligence. The identity information collected will need to be verified. The Act states that you must take reasonable steps to satisfy yourself that the identity information you have obtained is correct. This can only be done by collecting and citing documents, data or information provided by a reliable and independent source. For many of you, conducting CDD on your client will mean asking them to bring in their original identity documents with them. You will need to check they are not expired and that the photograph is a true likeness of the individual. You should take copies of their identity documents and retain these copies in the client file, either in hard copy or by scanning them to soft copy. To assist you to verify the name and date of birth of a person, there is an Identity Verification Code of Practice published on our website. The Code of Practice sets out the various combinations of documents that can be used to verify a person's name and date of birth. For example, their valid passport is accepted as a standalone document, or a combination of a driving licence and a credit card issued by a New Zealand bank that contains a person's name and signature. The Code of Practice also sets the standard if you want to verify the identity of your customer electronically. If you comply with the Code of Practice, you are considered to comply with the requirements of the AML CFT Act in relation to verifying the identity of any person you assess to be low or medium risk. A final word on customer due diligence. Although fast-paced scenarios may be common for some real estate agents, delaying the verification of customer identity information should be the exception. If you have to delay verification, your reasoning should be fact-based, justifiable and recorded. All information that you report is confidential. You must not tell your client that you have reported them. It is an offence under the Act to do so, and this is called tipping off. Prescribed transaction reports, or PTRs, are any international wire transfer of 1,000 New Zealand dollars or more conducted through a reporting entity, or a domestic physical cash transaction of a value equal to or above 10,000 New Zealand dollars. Suspicious activity reports, or SARs, are far more nuanced, and the requirement to report applies to the actual activity or transaction and includes proposed transactions and proposed services and even inquiries. Ultimately, what is and what is not suspicious will be determined by what you know of your customers, business and usual activities. The Act also outlines the condition for reporting within 3 working days once reasonable ground for suspicion is formed for suspicious activity, and 10 working days for prescribed transaction reports. All reporting entities must complete an annual report of their risk assessment and their program. We are developing a new online portal system that will be live next year. To keep things as simple as we can, the reporting period is from 1 July to 30 June. There is a 2-month submission window from 1 July to 31 August, starting in 2019. We have published a user guide on our website, Annual AML CFT Report by Designated Non-Financial Businesses and Professions, dated March 2018. You will need to be prepared to share with us information about your business in the annual report. This is likely to mean that you will need to consider ways of collecting some information that you have not had to maintain before. Most of the information shared is what we would expect you to record generally as part of your obligations under the AML CFT legislation. Some of the information you provide will enable us to engage with you appropriately by ensuring we focus our attention where it is most needed. It is a requirement that you have your risk assessment and program audited every 2 years, or possibly on request by us as your supervisor. The auditor has to be suitably qualified and independent. However, this doesn't mean that they have to be a chartered accountant or financial auditor. You must provide your audit report to us on request, and there are questions in the annual report about whether you carried out an audit and what the result was. Over the last 12 to 18 months, we have been engaging with the real estate sector. There are some suggestions to help with the transition to implementing work practices to comply with the AML CFT Act. Form a designated business group, or DBG. This is 2 or more businesses or people who agree to share AML CFT obligations, such as the risk assessment, customer due diligence, record keeping and account monitoring, filing suspicious activities and prescribed transaction reports and annual reporting. This may be an option if you already share back office functions with a related business or you operate under a single brand. For example, real estate agents who are members of a franchise might decide to form a DBG. The DBG agreement must be in writing and you must inform us as your AML CFT supervisor. Rely on another business for customer due diligence, CDD. If another business also has a relationship with your customers, you may be able to rely on it to carry out CDD for you if that business agrees to. However, you can only rely on it if it is also a New Zealand business or professional that has to comply with the AML CFT Act, or is a business based overseas and has similar obligations in a country with sufficient AML CFT controls, or already has a relationship with your customer and has carried out CDD to the required standard, or can give you its CDD documents as soon as practicable but within 5 working days from when you ask for them. This may be an option if you have existing agreements or business relationships with other reporting entities. For example, a real estate agent and a conveyancer may agree that only one of them carries out CDD in a real estate transaction. If you rely on another business, you're still legally responsible for ensuring the CDD meets the required standards. Outsource CDD to a third party. You can authorise another person or business to act as your agent to carry out CDD or to get the necessary information from customers. This may be an option if someone else usually deals with customers face-to-face for you and can verify their identity. For example, a lawyer or an accountant could appoint an agent in a city where they don't have an office. You're still legally responsible for ensuring the CDD meets the required standard. Thanks for your time. I'll now hand you back to our Director Mike Stone to close.
In summary, our key messages to you today are: read the guidance, appoint a compliance officer, prepare your risk assessment and program. Your risk assessment must inform your programs and both documents should be proportional to risk. Ensure you are collecting sufficient customer due diligence information. Report suspicious activity and prescribe transactions. We expect reporting entities to own and understand your obligations and your business money laundering, terrorism financing risks. Ownership isn't one person's responsibility. It needs to filter throughout the business. To demonstrate ownership, compliance policies need to be actually put into practice rather than written down and locked away in a filing cabinet. Understanding is demonstrated by tailoring your AML CFT policies to the needs of your business and making sure that everyone who needs to be is adequately trained. That is what we will be looking for when we undertake reviews. Ask us for help if you're not sure about anything. We will help where we can. Thanks for listening.